You think that you need 20% down to buy a rental property, and that is totally not true. In this episode, I'm going to share with you at least 3 ways that you can buy your first or next rental property without having to save up and put 20% down. Let's get into it. If you're new here, welcome to Wealth Within Reach. I'm Erica Brown. I'm a serial entrepreneur and real estate investor, and I teach landlords how to scale real estate without burning out, without draining your savings, and all the above. All right, so you want to be sure to subscribe so that you don't miss any episodes. I will give you the straight up, no fluff, direct, no gatekeeping information here. So subscribe so that you don't miss out on one single episode. Okay, let's get into it. I talk to people still today. I shout it from the rooftops. You don't need 20% to put down on a rental property. And when you're starting out, you don't know what you don't know. So even my story personally, specifically, it took me years, y'all, years to figure out other ways to buy property without putting 20% down. And what it cost me was so much. It cost me so many deals that I missed because I didn't have the knowledge and the strategy to be able to take down properties faster, which then, because I couldn't buy properties faster, then what happens that cost me future money that I could have made in real estate, whether that's monthly cash flow, whether that is future appreciation, tax savings, XYZ. You never know, especially if you're here and you're listening and you're like, I want to quit my job, or I want to retire early, or whatever your goal is on the other side, you waiting to invest because you think you need a 20% down payment is absolutely holding you back from the life that you want to be able to truly live. And so it took me, one, getting curious, asking questions, surrounding myself with other people who look like me to also invest in real estate. So many people think that you have to be rich to invest in real estate, and that's absolutely not true. I started with just a $3,000 down payment on my first property, which 10 years later, that has led to multiple $1 million of equity, net worth, 30-something properties that we've owned. I haven't even calculated how much we've made every month from these properties just from that one particular down payment, y'all. So I am here so that you will know, so you can't say that no one told you, that there are so many different ways that you can buy real estate without putting down 20%. Okay, so let's jump into it. Number one, the first financing strategy that I want to talk about today is the vacation home loan. I talk to so many people all the time, and they're like, I want a vacation home in Puerto Rico. I want a vacation home in Florida. Whatever it is, a vacation home loan. For some lenders, it's called a vacation home loan. It's called a second rental property home loan, whichever one. But buying a home as a vacation home, it only requires you to put 10% down instead of 20% down. Here's the thing I love about vacation home loans as well. I love that with vacation home loans, you get whatever the interest rate is for primary homeowners, you get that same rate with vacation home loans. Let me give you an example. When we first moved to the Atlanta area from Texas, we discovered the mountains. We love going to North Georgia mountains every month. It became a thing for us. And so we had a dream to buy a cabin, and we made that dream happen in 2021. We bought our cabin, and we bought it when interest rates were really low. So we were able to buy a cabin to use as an investment property. And because the rates were low at the time for primary home loans, our rate on our cabin was 3%. So we only have to put down 10%, and our interest rate was 3%. What I love about this strategy is that we were able to buy a vacation home loan that when we used it, we were able to enjoy it with our family. And when we didn't use it, we were able to put it on short-term rental and make money from it. So that was really good. So if you already know you want to buy a vacation property, then utilizing a vacation home loan could work out for you without having to put 20% down. All right, let's go to number 2. Real quick, while I have you, let me ask you a question. If you keep telling yourself you're going to get into real estate finally when the time feels right, but it's been years now and it just really hasn't ever felt right, or maybe you've got the money, but you just keep talking yourself out of the deal. Maybe you already own a couple doors and this year the numbers just haven't worked well. Insurance has went up, taxes, interest rates haven't went down. Either way, you're stuck and you're trying to figure it out by yourself, but you just can't figure out what to do next. I get it because I've lived it and I've also been there. I built a almost 40-door portfolio in a market that looked just like this one. And I didn't do it with the guru math or all that hype. I did it with real numbers and real community. That's why we're all coming together for one last time this November at the Owning It and Living It experience, November 13th through 15th, right here in Atlanta, Georgia. It's going to be 3 days of real strategy, really helping you figure out the exact moves that are working right now. And this room helps you finally make yours too. This is the final year. This is the last one. So you want to make sure you're in the room. Grab your ticket before the next price increase. The prices are going up soon. And when this event is over, it's over for good. Go to owningitandlivingitexperience.com and claim your seat today. You were never meant to build this alone. Come build it with us. Number 2 is one of my favorite strategies, the step up strategy. Okay, here's what I call the step up strategy. The step up strategy is when you buy a home to live in, you buy it, you live in the home, you live there for at least 1 year, and then you move out and you buy another one. And when you move out, you turn your home into a rental property. Okay, this is the number one way lots of my clients end up investing in real estate because it's the lowest barrier of entry. When you first buy your house, you're able to put 3% down, 5% down. It doesn't require a ton of money. And so you're able to lock in very low rates from an interest rate standpoint, or lower than investment properties. Because if you don't know, the investment property interest rates are always going to be a little bit higher because it's a little bit more risky loan. What that means is that if all you have is $5,000 and you need to pay your mortgage and you have to choose between the house you live in and your rental property, which one are you going to choose? You're going to choose the house you live in, which means that the investment property is a little bit more risky. So that's why the interest rate is a little bit higher. But with the first 2 strategies I've given you, your vacation home loan, you get a lower interest rate. And also the step-up strategy, you get a low interest rate. You're able to lock down your future rental property at a lower interest rate with a lower down payment than just buying a traditional rental property and putting 20% down. And if you really want to run it up, you can also house hack. So you buy a property that strategically has some type of way where you can earn income at the property. And this can look like so many different ways. I can literally do an episode of just this by itself because there's so many myths around house hacking. People think you have to be single, that you don't have to have a family. I house hacked with 3 kids, a husband, and 2 dogs. Okay. So if everything I got going on, if I was able to house hack, you can too. So whether it is you buy a house with a basement and then you turn that basement into a separate rental and you live up top, or we actually built a house. We built a house and we built an additional unit called an accessory dwelling unit, or an ADU, on the back of it. And then we made money from that. So there's so many different ways, but basically turning your home into a step-up property, living in it, and then moving out. And if you want to bonus it, house hacking is a really, really great way to be able to buy real estate without putting 20% down. Let's go to the next one. Quick break to talk about my sponsor, Baselane, because this one is personal and it's going to make you some money, okay? You know what I love about where Lawrence and I are at with our portfolio right now? We can actually live our lives without our properties running us. That is huge. That did not happen by accident, y'all. It happened because we got the right systems in place, and Baselane is one of those systems. When rent gets deposited into my Baselane checking account, everything just starts working automatically. I love it. I get instantly notified the moment it comes in. Transactions get tagged to the right property, the right category, and my bookkeeping stays updated in real time. There's no chasing tenants for payments, no logging into 5 different bank accounts, no spreadsheets that's 2 months behind. it just runs. And Baselane has a super sweet special right now. They're giving away $10,000 if you set up your system like I have and start automating your rental cash flow. Here's all you have to do. Set up your rental payments to deposit into your Baselane checking account, deposit at least $500 in rental income, and then you've entered a chance to win $10,000. All you have to do next is head to baselane.com/Erica Brown or click the link in the description below to sign up. Y'all better get this money, y'all. And I know I said 3, but I have a bonus one for you as well. So you want to make sure you stay to the end, because the bonus one, if you don't want to move into another house, the bonus one is the perfect one for you. And so many people can leverage this right now in 2026. Okay, but let's go to the third one. The third one, now this one is not one that you hear about hardly at all. And it's so good. I've had so many clients take advantage of it. I think more and more as our parents get older and we start thinking about, providing housing for our parents is really expensive to live in retirement homes and retirement communities. So for some of our parents who did not properly prepare for retirement, us as millennials are having to figure it out. And so this next strategy can not only help our parents be able to age in place, but it can also help us as their sons and daughters to be able to build wealth as well. And so this next one is called the Family Opportunity Mortgage. Okay. And again, a lot of people have not heard about it. And it may be called something different depending on each lender. But ultimately, if you have an elderly person or a parent that you're helping to take care of, or an adult child that you're responsible for, you could qualify for this mortgage. So instead of having to put down 20% to help your mom or your dad or your parents buy their house, with this mortgage, you can obtain a mortgage and only have to put down 5%. So their name will be on the mortgage, your name will be on the mortgage, and it only requires a 5% down payment for this type of property. So if you're in a situation where you have to take care of a parent or parents as they age, you may want to consider this strategy. I had a client who her mom was moving in with her or wanted to live very close by, and they had an opportunity to buy a property right next door. If they would have had to do the traditional down payment, conventional loan, whether it's DSCR or just regular down payment, they would have had to put down $60,000 in order to buy this house, which it would have wiped out their savings, right? So they joined my coaching program. I was able to really understand what their goals were, what they had going on. And I recommended this opportunity for them, the Family Opportunity Mortgage. And so they were able to buy that house. Their mom moved in for a year, ended up moving in with them, and they rented out the property. So now they were able to close on that property and they saved $58,000, y'all. They saved $58,000 in a down payment because they utilized this Family Opportunity Mortgage. Okay. So again, it's a game changer for so many people, so many of us who are trying to help our parents while also giving us the opportunity to build wealth. Okay. And so I know I promised you a bonus one. So let me give you this other one too. Okay. And I'm going to do a whole separate episode on it. But so many people in the United States are not moving. You want to move, but the interest rates are kind of high. So you're sitting on a lot of equity, especially if you bought your house prior to 2022. If you bought your house prior to 2022 that you're in right now, there's a good chance that you're sitting on a lot of equity. One of the things that I'm helping my clients, if you don't want to move, or if you can't stomach paying 6 and 7% interest rate and you're fine with staying where you are, but you also don't either have money for a down payment or you don't want to drain your savings, you can leverage your equity in your current home to help you buy new properties. So you can actually take out what's called a HELOC, home equity line of credit, or home equity loan. And you can leverage some of your equity in your property to use as a down payment for an investment property. So I'm walking my clients through that process of how to determine a HELOC versus a loan, and how much to get out, and how to pay the HELOC back. That's something that I help my clients with. But if you are thinking about buying a rental property and you don't have the cash, or you don't want to use your cash, you can look into leveraging your home equity to help you with the down payment. So if you're watching this and you're like, I want to do all of those things. I want to get a vacation property. I want to step up. You want to do all the things and you can't figure out what to do next. That's exactly what I do. I help landlords in my mastermind figure out the best way to scale that's based on your unique situation. So I invite you to book a free call with me. Let's chat to see if we're aligned, and I'd love to see if I can help you out. All right, so what did you learn new this episode? What strategy are you thinking about executing? If you're watching this on YouTube, please let me know in the comments. Don't forget to subscribe, and if this was helpful, share it with a friend. Thank you so much again for watching another episode of Wealth Within Reach, and I will see you next time.